Hello, everyone. Thanks so much for joining us today. We are allowing just a few more minutes for folks to trickle in and join us, and we'll get started here shortly. All right, thanks again for being here. We are going to go ahead and jump in because I know we have a lot of great information to share, and I want to make good use of this hour. So, on behalf of the International Services and Engagement Office, we are so excited to welcome our colleagues from San Diego State University. Professor Douglas Kelly, accounting lecturer at San Diego State and coordinator for the San Diego State VITA program. And Steve Gill, the San Diego State University Fowler College of Business faculty member, will present on federal tax filing requirements for non-resident alien for tax purposes. So, again, just a huge moment of gratitude to our colleagues and our partners for sharing their time and their expertise, as we know that this can be a big source of stress for many of our students and scholars. So, without further ado, I will hand it over. Thanks again.
Thank you, Grace, and thanks for the introduction. Hi, everyone. I am Doug Kelly, lecturer at San Diego State University and the site coordinator for the San Diego State VITA program. Along with me is my colleague Steve. So how we kind of run this, if you've been here before, I'll go through our presentation that we have for you while Steve is in the background silently answering all your questions in the Q&A. Please ask your questions there, and then in the end, if we have some time, I can also answer some questions at that time. But without further ado, I'll share my screen and we'll get started with the presentation. Cool. Perfect. So let's get started. So once again, as Grace had mentioned, this is kind of a tax workshop for foreign students and scholars and kind of determining your non-residency status and then what that means for taxable income to the U.S. Before we begin filing, I'm going to go ahead and turn my camera off as well because my face is not important here. The PowerPoint is. Filing taxes means submitting tax forms or tax returns to the appropriate government agencies. As everyone here is going to UCSD, for the majority of us, that will mean filing a federal return with the Internal Revenue Service and filing a state return with the California Franchise Tax Board. You may be responsible for filing taxes every year, but you may not be, and we'll get into that later on what that means. So what we're going to do is discuss this year, meaning 2025. So we're filing your 2025 tax year in the current year of 2026, but understand that anything relating to your 2025 taxes is in date December 31st, 2025. So when we talk about how many years you've been in the US and things of that nature, we're not going to, we will disregard anything related to 2026 when determining your 2025 status. Of note, and Grace can correct me if I'm wrong, but UCSD has offered in the past, and I'm sure still does, that Glacier tax prep software to assist you in preparing your tax returns. If you cannot get an SDSU VITA appointment, or hey, you just feel comfortable preparing your own returns, or you have someone else do it. Maybe you don't use Glacier Tax, but UCSD does offer that to assist you in preparing your tax returns. So SDSU's VITA program is open, but our appointments are limited. We opened our appointments on or about 1 February. We're open for 7 Fridays, starting this Friday all the way through 17 April. The first 6 days are already full, and we have about 20 appointments remaining for that 17 April. The one thing kind of new we did this year was I sent Grace an email when those appointments got opened so that UCSD people, students, and scholars didn't have to wait kind of until this date to schedule their appointments. So I hope you've already been able to do that. If not, there are still some dates available. And if we can, we'll try to increase capacity for all dates that we have, with the exception of this Friday. Due to our first day being open, we actually limit capacity greatly as our volunteers are just learning how to use the software and how to prepare returns. We've been training for about 4 weeks now, but Friday's the first day we're live, so the students won't be as proficient on Friday as they will a couple of Fridays from now. If you cannot get an appointment with VITA, there are other services available. Sprint Tax is reliable. We just talked about Glacier Tax, and you cannot prepare non-resident tax returns in TurboTax. So what I like to say this every year is, if you saw a commercial for it or a social media advertisement for it, you probably can't use it as a non-resident. So what is the US tax system? Is it considered a pay-as-you-go system? Income taxes are withheld from your pay as it's earned, And each year at the end of the year, you're essentially doing what's called a reconciliation or a true up, right? So some people wonder, man, I paid all year. Why do I pay more when I file my tax return? So if your actual tax liability is greater than the amount of federal taxes withheld during the year, you're going to owe a little more money. But if that's reversed and your actual liability is less than the withholdings, that's when we see a refund. The system is set up to provide refunds, but it doesn't always work that way. Um, Employers use IRS publication 15-T, and that's kind of the guideline for how they have to withhold from paychecks. And that is kind of designed with residents in mind. So specifically for non-residents, we see that not work as well. In theory, if you have one W-2 job, um, and that's all you had for the year, the system's designed to give you a refund. For non-residents, it doesn't always work that way. The one caveat exception there is because foreign students from India get to utilize the standard deduction, just like US residents do. Um, the system is set up better for foreign students from India than other non-residents. So with that being said, comparing refunds can be folly, right? It depends on your income, your withholding, your deductions. All of these can vary from person to person and even tax treaties, right? We just talked about India getting the standard deduction, but a foreign student from China does not get the standard deduction, right? So it's going to be very tricky to compare refunds. We get the question every year. It's, oh, my friend did his last week and he got $500. I did mine this week and I only got 100. Why? Well, I don't have your friend's tax return in front of me, so it would be kind of challenging. Uh, I would just give you maybe reasons why that's the case. And even year over year, your refund one year could be different greatly than your refund the next year. There's just so many variables and factors that go into this that it's difficult to compare. Looking at employment taxes or social taxes, this is Social Security and Medicare. Foreign students and scholars are not generally subject to these. However, if you do perform work outside of your treaty permitted work, then you would be subject to employment tax. As you're looking at your W-2, we're looking at boxes 3 through 6 on the W-2, and we'll see a W-2 a little later. But typically, we will see W-2s from foreign students and scholars that don't have numbers associated with Social Security and Medicare. That's the right way. There are some times where it's not done properly and numbers are there, and there is a process to get those monies refunded, but it would not be through your tax return. So when it comes to U.S. federal income taxation, um, basically there's two ways to do this, two applications, and that's a source-based and a resident-based. So let's talk about resident-based first. For a U.S. tax resident such as myself, regardless of where I earn money, that income is considered sourced to the U.S., and I must include that on my U.S. federal tax return. A source-based approach is, hey, only income earned in the US or considered to be US sourced income is taxed by the US. So this is where a non-resident can still be taxed in the US on US sourced income, right? We hear a lot, well, no, I was told I was exempt from taxes. That's not necessarily true. You may be exempt from the substantial presence test, and your country may have a partial treaty exemption exempting some amount of income. But generally speaking, you will report on your tax return all US sourced income from a gross standpoint, and then subtract out any treaty benefits that you may have. So we just talked a little bit about this, where a resident alien generally subject to income tax on the individual's worldwide income. So I'll go ahead and skip here to the next. So non-residents are only subject to U.S. income tax on the following types of incomes. The big one here is going to be W-2 if you work on campus or you have an internship, or capital gains if you sold stock, or dividends if you held stock and received dividends. So on the left here, Form 1040 is used by U.S. citizens, permanent residents, and resident aliens. And this is from a tax standpoint, right? You may be a tax resident, but not legally be a U.S. resident, right? So the right side is for our non-resident aliens, and that tax return is a Form 1040 NR or 1040 non-resident. So who is a resident? Any U.S. citizen, any green card holder, and anyone meeting the substantial presence test. So many of the people that are attending this presentation today are not U.S. citizens and are not green card holders, but the substantial presence test could come into play on determining whether or not a foreign student or scholar is a resident or a non-resident, right? So we're going to spend some time over the next couple of slides discussing the substantial presence test, as well as having some examples for you to kind of follow along. So the US government has a test based on the number of days present in the US to determine if you're a tax resident. That's the substantial presence test I just mentioned. Students and researchers, foreign students and foreign scholars may be exempt from having to take the test, right? And that's kind of the exemption that we want to really emphasize here is foreign students and foreign scholars may be exempt from taking the substantial presence test or from counting the days. So then you fail the test. And if you're exempt or you have exempt days, then you won't meet the substantial presence test, defaulting you to a non-resident alien status from a tax perspective. So definitions here, student, someone enrolled in classes as part of a degree-seeking program, scholar, researcher, teacher, anyone that's not a student. In this case, you can see the bullet points there, right? But professor, research scholar, U.S. Comes to the U.S. for a visit to lecture, observe, consult, train, or demonstrate special skills, right? So students can be classified as F1 or J1. A scholar will always be classified as a J1. So if you're an F1, no questions asked, you're going to be an F1 student. If you're a J1, then we have to ask, well, are you a J1 student or are you a J1 non-student or a J1 scholar? So how do you know if you're a non-resident alien or if you meet the substantial presence test? The test is two parts and it's based on how many days you are physically present in the US. And so the two parts, which you must meet both, it's not an or, it's an and, is you must have been present in the US for at least 31 days in the current year. And a second part of the test is you must have been present in the US for at least 183 days during the 3-year period based on that formula below, where 2025, every day counts as a day. The first year prior, in this case, 2024, every 3 days is a day. And year two, or the second preceding year, 2023, every 6 days is a day. So everyone's thinking, I've been here all year. So I passed this test. The exception to this test is if you're considered an exempt individual, right? And that's where most of you will fall into that. So if you're considered an exempt individual, the days counted here are the days you're here are exempt from being counted. Therefore, you would just put 0, 0, and 0 in all those lines. And so your days would be 0 for the substantial presence test, and you would be a non-resident alien. So how do I know? Some exceptions to days present are it does not include regular commuters from Mexico and Canada. It doesn't include days in transit, and it doesn't include days that medical conditions prevent departure. But the big one here is it doesn't include certain teachers, trainees, and students the days that you're here. It doesn't count. So how do I test for residency status? I'm a student first, and we try to determine if you're exempt. So are you temporarily in the US as a student on an FJ, M, or Q visa? I've never seen an M visa. I've never seen a Q visa. I'm sure they exist, but that's not typically what we see. So are you on an F or J visa as a student? And have you been in the US for no more than 5 calendar years? And understanding that for this test, any one day during the year counts as a year. So if you came to the US on December 31st, 2024, that counts as a year, counts as one of those 5 years. If you answer yes to both of these questions, then you're considered an exempt individual and your days here don't count for the substantial presence test. And once again, as I said in the beginning, 2026 does not count. We're analyzing your 2025 tax status. For scholars, this test is a little differently. It's a little different. The first question is kind of the same as the student, but now it's from a scholar perspective. Are you temporarily in the U.S. as a teacher or trainee on a J visa and not also a full-time student? And then the second question, which is worded a bit tricky, have you been in the US for any part of 2 of the preceding 6 calendar years? So we're looking at 2019 to 2024. So I want to rephrase this. and say, is 2025 your third year in the US on either an F or J visa over the last 7 years? So if I'm looking 2019 to 2025 and 2025 is my third year, then I'm no longer exempt. But if you have not been, if 2025 is your first or second year, then you're considered exempt from taking the substantial presence test. And now when it comes to scholars, that preceding 6 calendar years would also take into account if you were here as an F1 or J1 student as well. And we'll have an example that kind of shows that in a few slides. So IRS publication 4011 is a really, really good publication for you to kind of review. It's what we have printed for our student volunteers, and it's what they'll reference a lot. The chart here, you'll see the substantial presence test decision tree. I kind of narrowed it down to 2 questions because anything, the second true question is, are you in compliance with your visa? Right? I'm going to presume that yes, I'm not the visa police, right? I'm VITA, not visa, right? So I am just going to presume that that's a yes. You're here, you're getting your tax return prepared. I don't know any the wiser on whether or not you're in substantial compliance with your visa. So we presume yes to that question. And then the last two about closer connection exception, and then to claim that exception, those will be out of scope for our VITA services. So I don't get into those on the student side. But once again, you can check Pub 4011. You can run down this decision tree. What it also has are, we'll talk later about code 16, income code 16, income code 19, and the income code 20 treaty exemptions. It has a list of each country that the US has a treaty with when it relates to those different income codes. So you can see that too. If your country isn't listed, that's not a typo. That means there's not a treaty for that income code for your country. It also discusses how capital gains and dividends are taxed to a foreign student non-resident and foreign scholar non-resident. So once again, it's what we use at VITA. It's what we train to. But hey, if you have some time and you want to click on the link there, you can't click on it from a shared screen, but you can Google publication 4011, go to the IRS website, and you can kind of run through this as well on your own. And you see there, do not count the following at the bottom, that big exclamation point. Do not count the following as days of presence in the United States for the substantial presence test. For days, you're an exempt individual, right? So you're an exempt individual. You don't count those days present for the substantial presence test. You've now determined you're an exempt individual. Hey, that's exempt from counting days, not exempt from taxes necessarily. And you see kind of what we discussed earlier. It's the first 5 years for an F or J student, and then kind of a 3 and 7 rule or 2 and preceding 6 rule for J non-students or scholars. So first example I have here, we have an F1 or J1 student. They first arrived to the US December 30, 2021. They're physically present in the US every semester since arriving, but they leave for 2 months during each summer. So in reality, they're here in the US for about 305 days a year. But as a student, in your first 5 years present in the US, you're exempt, right? So we look at our exempt year since they arrived in 2021. 21 was the first exempt year, 2022 was the second, 2023 is the third, 2024 is the fourth, and 2025 is the fifth. Therefore, 2025 is their 5th year, so they've not been in the US for more than 5 years. Therefore, all their days are exempt. And you see, I put 0 for the number of days for the substantial presence test because they don't have any days that count towards that. Therefore, since they don't meet the substantial presence test, this person would be considered a non-resident alien. My next example would be, once again, also an F1 student. They arrived in the US August 1st, 2024. However, this student was also an undergrad student in the US under F1 from May 2015 to August 2018. In 2025, they were present in the US except for 60 days during the summer. Right, so now we're going to figure out what our 5 years exempt are. And this is kind of a 5 years lifetime, right? Not The non-student test is like this 2 and preceding 6. So you can have this rolling time where you are non-resident, you are a resident, but then you become a non-resident again. When it comes to F1 or J1 students, it's a 5 years lifetime. And we see, so in this example, 2015 through 2018 would be the first 4 years that this individual is exempt. 2024, they arrived in August, would be the 5th year that they are exempt. So 2025 is now their 6th. So they're no longer exempt from counting their days for the substantial presence test. And they were present in the US for 305 days in 2025. Of note, while they were here in 2024, those days were still considered exempt. That's why we put 0. But because in this example, the individual was in the US for at least 31 days in the current year, and their total using the calculation is greater than or equal to 183 days, this F1 student would be considered a resident for US tax purposes for tax year 2025. Example 3, we have a J1 scholar. Arrival date was August 29th, 2023. So in this example, 23 and 24 would be the exempt years. 2025 would be that 3rd year in 7, right? So that would be no longer an exempt year. And since they were here all year, their total number of days are 365. And as you can see, although they were here in 24 and 23, those days remain 0 for the substantial presence test because those days are still considered exempt from the test, even though now they have to take the test for 2025. But once again, because that 365 is at least 31 days in the current year and totals greater than that 183, this J1 scholar would be considered a resident alien. Moving on to another J1 scholar. So from August 15, 2021 until June 28, 2024, they were a student, and then they returned to the US on 8/15/2025 as a J1 scholar. So I think I realized I have a typo on this one. So 2024 and 2023, sorry, not a typo here. So looking at the 2 out of 6 preceding years, the first 2, that 2021 and 2022, would be considered exempt years, but 2023, 2024, and now 2025 would not be considered exempt years. So we do the test here. 138 is greater than 31 in the current year. For 2024, they were here for 180 days until departing. So that counts as 60 days because every 3 days is 1. In 2023, they were here the entire year. Every 6 days counts as 1, so that's 61 days. Added together, that's 259 days. So since that total is greater than 183, this scholar would also be considered a resident alien. So example number 5 here, and my apologies on the number of days, that tax year should read 25, 24, 23 for the actual calculation. But we have a J1 scholar, arrived in the US August 2019 to May 2020 as a scholar. They returned to the US on August 15th, 2025 as a scholar. So with that being said, their first 2 years as a scholar, that 2019 and 2020, would still be considered exempt years. But because they've been in the US for at least 2 of the preceding 6, 2025 is no longer considered an exempt year. So they got here August 15th. That's only 138 days. Yes, they meet the first part of the test, that 31 days in the current year, but they don't meet the second part of the test of the 183. Therefore, even though they're no longer exempt from the substantial presence test, they would still be considered a non-resident alien for 2025 because they don't meet the substantial presence test. All right, so I ran through 5 different examples. There's probably over 100 attendees in this thing. So that's probably 100 different examples that we can go through. So I'm not going to say that one of those examples applies to everyone in here because I've given this presentation to UCSD probably, I don't know, 8 times or more. And every year we get kind of a new unique situation. If that doesn't apply to you and you're still kind of confused, right, you can ask a question in the chat or ask afterwards or email the VITA email as well, and we can try to determine what your status is. So for exempt individuals, we kind of talked about this. You get to exclude the days present from the substantial presence test, which means you're much less likely to trigger tax resident status. Um, to count those days being exempt, you must complete Form 8843 every year that you're an exempt individual. You're still liable for income taxes, right? Exemption from the substantial presence test is not exemption from U.S. taxes. So what is Form 8843? So you must file this form if you're an exempt individual for substantial presence test purposes, even if you had no income, right? So if you came to the U.S. in 2025 and all you did was go to school, you don't have any treaty exempt income, you didn't have employment outside of the employment except, well, you didn't have any employment, you just went to school, then you likely only need to file Form 8843. If that's the case, we ask that you not schedule an appointment with VITA because Form 8843 is definitely a form that you can fill out yourself. It's not really a tax return. That third bullet there, it's an informational return. It's letting the IRS know, hey, I'm here, but my days are exempt. With that said, if you're not certain how to fill it out, then you can email the VITA email and we have instructions line by line on how you can fill that out. Once again, if that's the only form you have to fill out, we ask that you not make an appointment with VITA. Of note, if you're here with family, they're also required to file this form if they're present in the U.S. under an F or J status in 2025. So if you came here yourself, your spouse, and two kids, and all you all had was just 8843, you would fill out four of them, one for each family member. This is not a form where I can include all of my family members. Of note, if you're required to file an actual tax return, a 1040 NR, the 8843 gets included with that filing, right? So if you do indeed have a tax filing requirement and you have an appointment with VITA, right, as we're preparing your actual tax return, we'll also prepare the 8843 as one combined package to be electronically filed with the IRS, right? But if you only have to do 8843, we ask that you do that yourself. This website can get you the blank form. Once again, if you go to irs.gov and click on forms and pubs, you can find any form from current year to prior year. We usually get a question like, hey, I've been here 3 years. I've never filled this out. Technically, the deadline is June 15th each year. But if you want to go ahead and fill one out for 23, 24, and 25, it probably doesn't hurt. So if that's what you had to do, that's what you could do now. There wouldn't be a penalty because penalties are typically based on the amount that you owe, and zero multiplied by anything is always going to be zero. If you're a non-resident alien with taxable income, what do you need to file? You'll file Form 1040 NR, and really, you do not need to file this form if you have no taxable income and you have no other reasons to file. So if you had wages or scholarship income exempt by a tax treaty, you had a taxable scholarship, or you had income tax withheld from your checks, then you should file Form 1040 NR. If none of these apply to you, then all you have to do is Form 8843. So wages received in 2025 is kind of the growth. So, the starting point is I'm going to include all of my wages received in 2025 and potentially all my wages received in 2025, and then I'm going to subtract the amount exempted by a tax treaty, if any. For example, I'm a foreign student from China. I worked on campus and I made $15,000. I will report $15,000, but then I know we'll subtract out $5,000 due to the U.S. China tax treaty on income code 20, which is where W-2 wages would fall, right? So that really makes my wages only taxable to $10,000. Then we add in any other income taxable to the US, that'd be dividends, capital gains, taxable scholarships. Then we can subtract certain deductions. Usually the only one we see here is student loan interest on a loan that originated in the US, right? So that's be a US bank student loan interest. That gets us adjusted gross income. We then subtract the itemized or the standard deduction. And the standard deduction is only available to foreign students from India. So therefore, typically what we see with almost every other non-resident is they itemize their state income taxes and deduct those to get the taxable income. Then you go to the tax table, you get tax before credits and payments. You subtract tax credits, you subtract payments, and that's tax payments would be like your withholding on your W-2s or your 1042s. And that gets you down to, hey, do I owe more money or am I getting a refund? Tax credits, it's on here, and as you can see, very, very rare. Child tax credit, education credits, earned income credit. There's a ton of different credits that exist within the US tax system. But almost all of those are not available to non-residents. And typically for students, what we see, even if you're a resident student, right, the only credit we typically see students qualify for are education credits, such as the American Opportunity Tax Credit or the Lifetime Learning Credit, which is why the university issues you a Form 1098-T, right? They issue that to everyone, not just residents, right? So we'll get somebody that provides us with that, right? For us, if you're a non-resident, that's a form we will just disregard because you're not eligible to claim education credits as a non-resident. So treaties, so different treatment for students and teachers, researchers, and different types of income, right? I think there's 191 countries, I think is the last count I recall. The US has probably treaties with every country, but specifically tax treaties, we may not have tax treaties with every country, right? So what treaties do is they permit a certain amount of income to be treated as exempt from income tax. Each treaty is different. You can see here, those are the treaties that are available. You can also download publication 901 from the IRS website. That will also kind of give you a good guideline or guidance for treaties and which countries we have them with. Publication 4011, as I mentioned earlier, breaks down, has charts for income code 16, which are scholarships, income code 19, which is what a J1 non-student would typically earn. And you're getting paid by the university as a J1 non-student. That's typically income code 19. And then income code 20 would be working on campus or working at an internship in relation with your degree program. So I just talked about publication 901. And then for the treaty to be applicable to you, the student or scholar must have been a resident of the treaty country prior to entering the US for the provisions of that treaty to apply. The key factor is residency and not citizenship of the individual. Um, Now, what we see 99% of the time is a foreign student. Well, the student or scholar comes from the country that they were a citizen of and were living in prior to coming to the US. For example, foreign student uh, comes over to the US to study. They're from India. They were born in India, raised in India. They've been in India their entire life. And now they're here in San Diego on an F1 visa, right? That's going to be easy. Where it becomes hard is, hey, I was born in India. I was a citizen of India, but then I went to go to university in the UK and I was there for 6 years. And then I came to the US, right? You probably hit some sort of residency status in the UK. So you had the UK treaty apply to you and not the Indian treaty apply to you because your residency was UK prior to coming to the US. So some common treaty terms, there's different income exclusions amount, right? And those vary by student versus scholar, and there's different lengths of time. Sometimes that treaty exemption is unlimited. Sometimes it's 5 years, sometimes it's 2 years, sometimes it's 6 years, sometimes it's 4 years, right? So we get back from the beginning of this presentation, we talked about comparing refunds can be folly, right? Comparing tax treaty treatment can also be folly, right? And this is just another layer that goes into determining, what your taxable income is as a foreign student, non-resident scholar, a foreign student, non-resident, or a foreign scholar, non-resident, right? So it just depends, and there's so many factors that are involved that's why comparing refunds can be tricky. A few countries have retro treaties, and these are essentially treaty clauses saying that if the maximum years of presence are exceeded, the entire treaty benefit is lost, right? So typically, a foreign student doesn't become a resident until after their fifth year. However, if a German student is here after 4 years, they lose their treaty benefit. They'd still be considered a non-resident, um, but Code 20 income for German students is they get $9,000 of income exempt every year. If they stay longer than 4 years, that 9,000 becomes zero for every year, including those first 4 years in which someone took the treaty exemption. The same is true for scholars after 2 years from India, UK, Netherlands, and Luxembourg. There are others as well. I'm not going to get into every one of them. The U.S.-Canada treaty, not treat, is unique, but I'm sure we also have some unique treats as well. But typically for that one, if your earned income is less than $10,000, then the entire amount is exempt. If the income is greater than $10,000, then the entire amount is taxable, right? So if you're working and you're from Canada, you want to stay under that 10,000 number because if you go to 10,001, well, now you now have to pay tax on all 10,001. But if you're exactly at 10,000, then you're federally tax exempt from paying taxes on that income. So what this could require a taxpayer to do is file amended returns and pay. So a German student takes this treaty benefit every year, gets kind of a tax benefit for it, but then realizes, hey, I actually don't qualify anymore. The only way to fix that is an amended tax return and pay tax on previous year's income. Of note, SDSU VITA does not prepare amended tax returns unless we made the mistake, right? If we make a mistake on your original return, we will own that mistake and we will file your amended tax return. And the reason for that is our student volunteers, we only have a limited amount of time to train them. They aren't trained on how to prepare amended tax returns. So if SDSU VITA takes on filing an amended tax return, it is me doing it as the site coordinator. And it's usually after the deadline and after my students are all gone anyway, so I couldn't ask them even if I wanted to. What I would say is if one of these retro treaties could apply to your situation, I would just be mindful on how long you intend on staying here, right? That German student with $9,000 of income probably is not as big of a deal as a foreign scholar from India who may earn 50 to $60,000 a year being a scholar. Well, I just took 2 years of $50,000 being exempt, and now I just hit my third year here. That's going to be a large tax bill. So what I would say is if you are in that situation, a foreign scholar from India, and you believe you will be here more than 2 years, then don't take the treaty benefit or the treaty exemption in those first 2 years. Go ahead and pay that tax, right? And then if you do leave prior to the 2 year mark, amend that return and get your money back. Because if you amend your return and have to pay tax, the IRS could also enforce interest and penalties for not paying that tax on time. Yes, that's true. Even then, when you filed the return, what you were filing was valid, right? So just be mindful if your country does have a retro treaty and how long you're going to be here, if it makes sense for you to take those treaty exemptions or not. This is also retro treaties you can find in Pub 901. Read the section country that applies to you. Scholars or non-students start on page 24 and students start on page 29. So reporting treaty income, each type of income that an alien can earn is identified by numeric code on Form 1042 as Box 1. International students and scholars should receive that form in lieu of Form W-2 for any income that's covered by a treaty, and sometimes income received that is not covered by a treaty but is not W-2 income, right? So if you receive a scholarship from the university that pays for room and board, um, but you don't have a treaty exempt, there's no treaty with your country, you're still going to receive a 1042S from the university that reports that amount because any scholarship that's not used for qualified education expenses is taxable unless a treaty is there saying it's not, right? So if you got $10,000 for room and board and you go to Pub 4011 and look at income code 16 and don't see your country listed, you're going to pay tax on that $10,000. The most common codes we see are 16, 19, and 20. I kind of went over those a little bit. We'll do it again. Code 16 is going to be income from scholarships or monies from scholarship or fellowship grants. Code 19 is compensation for teaching or researching. And code 20 is compensation during study or training, right? So typically students or foreign students, F1 or J1, 16 and 20 are kind of the applicable income codes. And for our scholars in the room, that 19 is the applicable code that we typically see income fall under. This is just a snippet out of Pub 4011. You see income code 16, you see countries listed, you see no limit for China for max years in the US. And this isn't for resident versus non-resident. This is for any type of scholarship. So this, if a Chinese student receives a scholarship for room and board, they don't have to pay tax on it because You see the maximum years in the US is no limit. The maximum dollar amount is also no limit. Um, what's not on this list is Iran, right? So if you're a foreign student from Iran and you get a scholarship that pays for room and board, you will pay tax on that, US tax. Uh, Once again, a snippet of code 19. You can see kind of what it says there. And then lastly, a snippet for code 20. Once again, you can find these in Pub 4011. If your country isn't listed for the specific income code, then your country doesn't have a treaty with the US for that income code of income. So what does a 1042-S look like? Here's what it probably looks like. You would see in box one that income code 16, 19, or 20, gross income of, let's say, 1,000, and then federal tax withheld. Uh, Typically, if there's not an exemption, we'll see tax withheld. If there is an exemption, that means there's probably a treaty, and we wouldn't see any tax withheld from that scholarship. You may also receive a 1042-S from your bank with income code 29 if you earned interest or a bonus. So if you signed up for an account at Calco's Credit Union, and they were offering a $100 bonus for signing it up. You'd probably get a 1042-S with income code 29 that we'd want to report on your return. Still treaty exempt, but we would still include the 1042-S as part of your tax return. So the 1042-S is prepared by the university, in this case, mostly by the university, UCSD, or if you're employed outside, if you're working somewhere as a W-2 worker, in theory, they would do it. A lot of times they don't. But just because you didn't get a 1042-S doesn't mean you can't take advantage of the treaty exemption if it's applicable to your situation. For questions on when those 1042-Ss are issued, I would defer to Grace and Naleli as they know those answers better than I do. Not everyone gets a 1042-S. What I would say, if you're a foreign student from India, it's going to be uncommon for you to get a 1042-S because if you're working on campus, there is no treaty exemption necessarily for India foreign students. You get the standard deduction, right? But that is not something that we see on a 1042-S. That's something that's kind of put in place when we file your tax return. So if you work on or off campus, you get income code 20. Students and trainees from many countries are allowed to earn some money tax-free in the US. Just know that if you're working in like an employer-employee relationship, that's likely going to be income code 20. And it's typically if you work on campus or you do an internship that's related to your field of study, those are allowable works. Whereas sometimes if you try to do things that are not within the campus or some internship, this could be code 17 and 18 income, which would be ineligible for the treaty exemption. But for the most part, we don't see this very often. We see working on campus or an internship that's related to your degree that you're studying to earn. So looking at Form W-2, you can see what it looks like here. That red box should actually be up to be 3 through 6. Those probably should be blank, and 7 and 8 probably are also blank for you. But I was trying to highlight that Social Security and Medicare wages here. Your federal wages will be box 1. Federal tax withheld will be box 2, that 9,000 and that $900. And then down here on box 15, which is kind of hidden, but left of box 16, state wages 10,000, state income tax $500. So if I were to see a W-2 where the federal wages are 9,000, that box 1, and the state wages are 10,000, then I'm going to think that I should have a 1042-S somewhere. And it should be the difference of those two amounts. So here we would see, I say 16, 19, 20. This would really be income code 20, $1,000 gross income. And we'd probably have no tax withheld because this likely means there's a treaty exemption. This is how it's properly done. And then it's a lot easier in our software to make it work. If for some reason you didn't get a 1042-S and box 1 was 10,000 and box 16 was 10,000, but you do qualify for this $1,000 exemption, we can still force that treaty exemption to be applied. You're still legally allowed to take the treaty exemption, even if the 1042-S isn't issued properly. So not having a properly issued 1042-S doesn't hinder you from taking advantage of a treaty exemption if it's applicable with your country. So some outside employers will not handle your taxes correctly. I'll really emphasize on when you work on campus, it's probably done right because the HR department see this much more often. If you're on like a one-off internship, that HR department may not handle it correctly, right? So that's where you're going to get, hey, there's not a 1042S, but I should have a treaty exemption. We can still apply that. They also may have Social Security and Medicare tax withheld. We can't fix that by filing your tax return, but there is a form you can fill out separately that you can submit. There's actually two methods to get your money back, and that's first going back and asking the employer to reimburse you. The second is filing a form with the IRS. I would try 20 times first, trying to get my employer to give me a refund because the form you have to file to get Social Security and Medicare taxes back, it's not electronically filed, it's not trackable, it's not traceable. And we've seen 6 to 12 to 18 months before people get their money back if they do, right? So it's not something you can track. That's why I would highly encourage going to your employer first and requesting that back. Additionally, an internship may misclassify you and not give you a W-2 and issue you more than likely a 1099 NEC. The miscellaneous for this purpose is kind of an outdated form, but that could also be issued. If you're receiving a miscellaneous or NEC for an internship you did, that's probably not correct. But getting the employer to change that to a W-2 is also unlikely. We can still handle your tax return at VITA. It just makes it a little more difficult to do. So if you're dealing with a miscellaneous or NEC, you can see if you're a resident, this is what you do. If you're a non-resident alien, you can report it as other income. If it's a miscellaneous, if it's an NEC, we're reported on Schedule C, which typically means you're a business, right? But you're doing an internship. You're not really a business. Um, you'll remain exempt from self-employment taxes, so you could, in theory, also report it as other income as well. So I just talked about if your employer mistakenly withholds employment taxes, Social Security, and Medicare. Once again, I gave those two steps. And if you, after you're like, I want to get that money back, but I don't remember, you can email the email there. And I have a draft email that I send out probably 50 times every year to people to get your employment taxes back. So other forms you may have received a Form 1099 INT for interest income can disregard for federal tax purposes because interest received on deposits held in the U.S. banks are not taxable if you're a non-resident alien. That 1098T, that's from a university, that's a tuition statement. We can disregard that because educational credits are not allowed for a non-resident alien. Others, you could receive a Form 1099 div or a 1099B. The div is for dividends. The B is if you sell stock. A lot of times, platforms such as E-Trade, Fidelity, Schwab, Robinhood will issue you what's called a consolidated 1099, where the interest, the div, the B is all reported within like a 10 to 20 page document. With that being said, if your consolidated 1099 includes stock sales that are considered wash sales, or you dealt with cryptocurrency, SDSU VITA cannot handle your tax returns and you would be considered out of scope for our services. So a unique treaty, India students on an FJ or M visa are allowed to use a standard deduction instead of itemizing. So an Indian student may take a standard deduction equal to the amount allowable in Form 1040. In 2025, that standard deduction is $15,750. What this means is the first $15,750 a foreign student from India earns, they will not be taxed on. This isn't considered a treaty exemption amount. It is considered an allowable standard deduction based on a treaty. Yes, confusing, but it's not specifically a treaty exemption amount. It's just an ability for a foreign student from India to take advantage of a standard deduction that residents in the US get to use on their tax return. A student from China is entitled to a $5,000 exemption each year for time reasonably necessary to complete education or training. Even if they become resident aliens for tax purposes for 5 years, they can still utilize the $5,000 treaty exemption benefit. For China, a scholar is exempt from tax on earned income for 3 years. After 2 years, they become a resident, but they still get one more year of tax exemption benefits under the treaty, even though they become a resident. So deductions, so itemized deductions. So non-resident students and scholars, except for students from India, are not permitted to take the standard deduction. And itemized deductions are limited to state and local taxes, charitable contributions, and then student loan interest, which isn't really an itemized deduction, it's an adjustment to income. But those are kind of the three things that you would be allowed to utilize to reduce your taxable income. And so what we see a lot of is in a year, a foreign student from China may take an itemized deduction for state taxes paid of $300, but then they get $200 of that back as a refund. When that happens, they would then be required to report that $200 refund as income in the following year, and you would receive Form 1099-G. So for our purposes, if a foreign student not from India receives a 1099-G, we will include that as taxable income when we file their tax return. Excuse me. If you're a student from India, you don't have to include this because you got a standard deduction and didn't itemize your deductions. Um, so I'm going to go ahead for kind of time, a little bit of time to leave time for questions. I'm going to skip through the next couple slides. Um, this one, all unmarried resident and non-residents must use single filing status. Married non-residents must use married filing separately, even if their spouse is present in the U.S. There are some special rules for dependency exemptions if you're from Canada, Mexico, South Korea, and India. And then a non-resident alien who is married to a U.S. citizen or resident can choose to be treated as a resident and file a joint return with their spouse using Form 1040. So even if you're exempt from the SPT, the substantial presence test, but you're married to a U.S. citizen, you can say, hey, I don't want to be considered a non-resident. I want to be treated as a resident so I can file a joint tax return with my spouse. If you both or if you're married and both of you are foreign student non-residents, you cannot utilize that option, right? This is only if one is considered a resident. Talked about the dependents for Canada, Mexico, South Korea, and students from India. Go to page 40. If this is you, go to page 40 of publication 519 and read, and you can see kind of what the rules are for that. We don't see many of these. So if you're married to a U.S. resident, you can file jointly and be treated as a resident. Um, what this opens up is then you can take advantage of child tax credits, earned income credits, education credits. These credits are not typically reserved or available to non-residents. So if you became a resident in 2025, but your spouse is not a resident, once again, if one is and one isn't, you can choose to both be treated as residents and file jointly. Just know that kind of from the beginning, we talked about a resident-based approach and a source-based approach. If you're considered a resident, the income included in your U.S. tax return is considered your worldwide income, not just your U.S. sourced income, right? So you got to take that into consideration when making that determination. So some timing issues. The treaty exclusion does not match up with an exemption from the substantial presence test. So an example here is Anwar came to the U.S. on an F1 visa on August 1st, 2020. Exempt from counting days all the way through 2024, but not 2025. He's a resident for tax purposes for the 2025 tax year, but his treaty actually runs, I should say, August 1, 2020 to July 31, 2025. So in that example, if he earned some income in the first half of the year and there's a treaty exemption for that, he could still have treaty excluded income. So for glacier tax prep, if it can't handle your situation, you have treaty provisions that apply to a resident return, timing with treaty and substantial presence test. You want to make that election to treat a non-resident spouse as a resident, or you have retro treaty issues. Glacier tax prep likely cannot handle those. If you're a student, we say student, but if you're a foreign scholar, we can handle your return as well. Our student volunteers are more adept to handling foreign student tax returns because that's what we see more of. You can book an appointment with SDSU VITA. Um, if you're a scholar or a student that cannot get VITA services because you're out of scope or we're out of availability, you can't use Glacier Tax Prep, you can't use Sprint Tax, then you'll likely need to hire a paid tax professional to file your tax return. Once again, I advise heavily against non-residents utilizing commercially available software such as TurboTax. So paid preparers, most trained will be certified public accountants or enrolled agents. Least trained H&R Block, Liberty Tax. So the way kind of H&R Block and Liberty Tax work, first, they really see a lot of resident returns. So even if you went there, it'd be hard for them to understand what's going on because they're not trained to that. But in addition to that, these people, not everyone that's preparing your return at these big box stores are actually certified or certified public accountants or enrolled agents, or are not the ones that are like going through the train, like going through like the hard, vigorous training to be a paid tax professional. There may be one or two people in that office, kind of in the back, that are running the whole show. And there's 30 people out front that just went through a 30-day training. And now they've been released to the public to prepare tax returns. You could get lucky and you could get Steve, who's been a tax professional for 30 years, retired, and it's like, you know what? I want to go just do a couple tax returns in HR block. Steve could handle your situation. Or you could get Jimmy, and Jimmy's down on his luck, just was a plumber but got laid off and said, I need to find money, and saw H&R Block was hiring, and you're the first tax return he ever did. Right. So that's kind of the variation, and being a little bit semantic here with least trained versus most trained. But that could be your level of experience gaps between who you get at H&R Block or these big box stores. Once again, you'll have to, if you can't do it with Vidoc, Laser Tax, or Sprint Tax, or yourself in some way, you need to find a preparer that specializes in non-resident and international issues. And I can't help you with that. I don't have a list of those providers. First off, there's not many of them because it's a very niche tax subset anyway. Here are some of the resources that you can use. I got the IRS website, the Franchise Tax Board website, but I also put in a link for the Form 1040 NR instructions, Publication 901, and Publication 519. With that, I'm going to open the floor up for questions that anyone may have and that weren't already answered by Steve in the chat. So with that, I'll stop sharing my screen and we'll open the floor. Thank you for your attention with this presentation. I hope that you found some value in it, even if it's maybe your second or third time seeing it. Thank you.